Okay guys, welcome back to another video. This one is a continuation of my series of coverage on these SPACs, these special purpose acquisition companies that are these reverse mergers that go out into the market and snap up these private companies. Now in this one in particular, I want to talk about BFT. They are going after Paysafe, which is a large private company behind Neteller and Skrill with their payment network. So I've got 9 things here that are supporting the bull case on this one, and I've got 5 things to tell you about that support the bear case. And if you stick around to the end of the video, I'll weigh them all up and we'll see who's the winner here. Is it the bears or is it the bulls? Okay, so basics first. An SPAC is a special type of company that is basically formed by investors that pool a big pile of money. The company initially does nothing and owns nothing. It's just this big pot of capital. They do an IPO with that empty shell company and they go public. At that point, anybody can buy it, but you don't yet know what you're getting until they actually go out into the market and make a deal, find a private company to acquire. If they do find a deal, they'll bring that private company into the shell company in a reverse merger, and then boom, suddenly that private company is now public. So it presents a unique opportunity for you to buy something before the actual IPO. Now this one in particular, BFT, is headed up by an investor by the name of Bill Foley. He's actually the head guy behind Fidelity Insurance in the US. Now, he's found a deal here to buy Paysafe, which is a large private company that operates a number of different products. Neteller and Skrill are 2 of their primary payment networks, and they have a number of other products as well in that financial, fintech, payment processing space. Paysafe is already very active in the iGaming industry, casinos, sports betting, online gambling, this kind of thing. And Foley, with this deal, is looking to aggressively grow them into that space.
What's the upside potential?
Okay, point number 1 on the bull case here is that Bill Foley is a really good guy to get this deal done. He has an amazing track record with Fidelity. You know, he bought them when they were a tiny little local insurance company in Arizona, and he grew them into the single largest title insurer in the US. It's a really, really good growth story. So Foley knows something about payment processing within the insurance industry. He knows old school finance. Second point is that he actually owns a hockey team. He owns the NHL franchise, the Vegas Knights. And so he knows something about sports. He knows something about sports betting. And Foley has a track record of being able to grow through acquisition, something that's actually really difficult to do. It's a risky growth strategy versus organic growth. And Foley has demonstrated a really, really good ability to do this with Fidelity. That's largely how they grew to the size that they are, by snapping up smaller title insurance companies and consolidating what was a fragmented market. Foley has the ability to do it, which is really, really important in this particular opportunity. And that brings me to point number 2. The US iGaming market is very fragmented right now, and both merchants and consumers would benefit from consolidation. So on the consumer side, these digital wallets are difficult to set up. There is a lot of legislation around this know your customer thing. There's anti-money laundering laws that all of these networks have to be compliant with. So for a consumer to open a new account, you have to pony up a lot of personal information and you have to jump through a lot of hoops with forms and approvals and all that kind of thing. So, you know, if you as a fairly active user of these different payment networks have to sign up for and then maintain multiple digital wallets over time, it's a real pain. Consumers would really rather just open one digital wallet that has very broad support across all the merchants they deal with and be done with it. They'd absolutely benefit from this. Point number 3, Paysafe is not a startup. Sometimes these SPACs go after these fly-by-night startups that are actually kind of garbage companies that actually don't have good prospects. That's not the case with Paysafe. They've actually been around for a long time. And if you take a look here at this picture that I put together in terms of their evolution and where they came from, they're actually formed from different mergers and acquisition activities over the last 2 decades as these various entities have bought each other up and grown through acquisition over time. In 2017, Paysafe was actually brought private by some venture capitalist firms, and now this transaction is essentially these guys looking for an exit, and they're looking to sell the private company, Paysafe, to Foley and allow it to go public again. Number 4, this payment network has deep penetration into both B2C and B2B. So B2C is this business to consumer sort of market where consumers will set up an individual wallet and go online to make payments. There's also a peer-to-peer element here where users of Skrill can actually pay one another, split the bill at the restaurant, all this type of thing. There's deep penetration there. They also have the same penetration on the B2B side. So they have solutions beyond just Neteller and Skrill that get into business-to-business payments, receivables management, and all that kind of thing. And so they're equally deep on both sides, which is a unique advantage for these guys in particular. And it's something that they call attention to in their investor presentations. So Neteller in particular as a product solves a key problem in iGaming, which is the ability to open an account and do business with these companies without having a credit card. All you need to be 18 years of age or older and have a valid email address and proof of identity and all that kind of thing. Typically, there's a lot of folks in that category that cannot get a credit card. And even if they did, these credit card issuers would probably not allow transactions with some of the online companies that they actually want to engage in iGaming with. Number 6, they already have deep integrations with a lot of merchants that the credit card companies will not do business with. They don't want to be associated with this space. And the same is true of some of these fintech companies like Square. They don't want to do business with casinos, as an example. And Neteller is already doing business with a lot of these guys. Number 7 is that it is difficult to switch digital wallets. So in that sense, once you own a customer, they tend to be sticky. It's difficult for them to migrate to another platform. It's a real pain. And so as long as you don't blow your customer relationship by overcharging on fees or providing bad service, you're typically going to retain that customer for a long time over time. Number 8 is deregulation. So this is kind of the exciting thing about the iGaming industry right now. There's a long-term trend of deregulation. A lot of the existing laws have been loosened, which is sort of allowing this floodgate of money to come into these payment processing networks as the popularity of iGaming and gambling ramps up. Sports betting is way easier to do now than it ever used to, and there's a lot of industries wrapping themselves around it. And finally, it's important to point out that this company is not just Neteller and Skrill. So those are their 2 flagship products, but they also have some behind-the-scenes B2B integrations that are not immediately obvious, and there are additional growth vectors there. Just as an example, they now have deals with both Apple and Microsoft.
Let's talk about risk.
Okay, so like I said, there's 5 things here to talk about. Number 1 actually gets to this deregulation point, which is certainly in the bull case, but I think there's also a bear case to be made for deregulation in that in spite of the deregulation trend, there is a lot of fragmentation in terms of jurisdictional compliance. So within gaming and online gambling and all this kind of thing, different states within the US have wildly different rules in terms of what you can and can't do and the sorts of forms and the sorts of compliance processes and all this kind of thing. And those are subject to change over time, not always for the good. Point 2 is all about competition. I think right now that Paysafe is enjoying a lack of competition, but I think the possibility exists that at some point in the future, some of these larger payment processors like Square or PayPal or even the banks, Visa, MasterCard, they could decide to hold their nose and enter this space that they've so far not wanted to play in. Number 3 is a bit of a nagging concern. I think I have to ask myself, why are the private backers selling now to Foley after just having taken the company private 3 years ago? Now, I suspect it's just an exit strategy, and it may be that they had this plan in mind all along when they bought them private in 2017. They were just looking to make some money and then have an exit event. This makes sense if you look at the math. In 2017, the valuation, enterprise value, was around $2.8 billion, and today they're looking to sell to Foley for around $9 billion. Point 4 here is back to that acquisition idea. Growth by acquisition is risky and it's difficult. From a shareholder standpoint, you kind of want to hear that a company has really good prospects for organic growth because that type of growth is low risk. And finally, point number 5 is disruptive technology. So I think that blockchain is an existential threat both to traditional banks and payment processors, but also to these fintech companies. It's all about fees. These payment networks can extract a lot of money from their users of these digital wallets in terms of fees, and blockchain has the potential to destroy that business model. Okay, so in terms of summary here, I think the single overriding consideration is that this is not a hype stock. Unlike a lot of SPACs, it's not a hype play. This is a solid business. It's been around for a long time, and I think it will continue to be around for a long time. So really, if you buy this one, you're making a bet on three things. Number one is Foley's ability to execute on this one. Bear in mind, he's 76 years old. Does he have a solid team around him? He seems to. Does he have a succession plan? I don't know, but you are making a bet on his ability to grow by acquisition. You're also making a bet on the overall growth of the iGaming market. Is this something that is going to experience significant growth? And can Paysafe move from a fairly traditional player into a high multiple, really, really valuable payment network within iGaming and capitalize on that growth? And finally, you're making a bet on the lack of a serious competitor or disruptive technology in this space. And can they actually capture that growth without being interrupted? So I think the answer to all of those things is yes. I think the bull case outweighs the bear case by a pretty significant margin on this one. I think it's a good investment. And looking at the current price, even after this announcement, it hasn't experienced the same kind of hype premium that a lot of SPACs had. I think this one can actually be had for a reasonable price. The bull case absolutely wins on this one. So guys, that's it. That's my analysis. I hope this is helpful. Please throw it a like if it was. Subscribe, ring the bell, and I'll see you on the next one.